On a single Tuesday in August 2024, Starbucks stock did something it had never done before. In one day, it jumped 24.5%, $21.4 billion in market value, appearing out of thin air. Here's the weird part. Starbucks didn't reverse a political position. It didn't cancel a Pride campaign. It didn't apologize for anything. The only news that day was a new CEO, a guy who used to run a burrito chain. If Starbucks' problem was really that it went woke, nobody told Wall Street. The actual story is buried in the filings, and it started in a country most of this debate completely ignores. If you've been anywhere near the internet in the last 2 years, you've seen the story. Starbucks is failing, and the reason you've been told is simple. They went woke, Pride cups, DEI hiring, rainbow flags. The market, the story goes, finally punished them for it. It's a clean narrative. It's also almost entirely wrong. Here's the setup most people don't know. For 5 years, Starbucks stock has gone nowhere. Total return, essentially zero. Over the same 5 years, the S&P 500 roughly doubled. Starbucks, a company with $36 billion in annual revenue and nearly 40,000 stores worldwide, has been one of the most disappointing big-cap stocks of the decade. So something clearly broke. The woke story is tempting because it's emotional. It makes you the hero of your own boycott. But when you actually open Starbucks' SEC filings, the documents the company is legally required to file with the US government, the documents where lying goes to federal prison, a completely different story comes out of them. 3 forces pulled Starbucks down at the same time. None of them cultural issues. One of them is so big, it might end up reshaping the entire global coffee industry. And the CEO who's now trying to fix it didn't come from Starbucks. He didn't come from coffee at all. Hold on to that. It matters in about 7 minutes. Let's start where the damage is biggest. China. In 2019, Starbucks had 34% of China's coffee market. By 2024, that had crashed to 14%, more than half their market share. Gone in 5 years. This is not a cultural problem. Nobody in Shanghai stopped drinking Starbucks because of a Pride cup in Seattle. Something else showed up. Its name is Luckin. And here's the plot twist nobody in the American debate is talking about. In 2020, Luckin got kicked off the Nasdaq. They had committed actual fraud, inflating sales by over $300 million. By every reasonable measure, the company should have been dead. Instead, by 2022, Luckin had more stores in China than Starbucks. By 2023, they had more revenue in China than Starbucks. And by the end of 2024, 22,300 stores. Starbucks had about 7,600. Luckin tripled them in 4 years after a fraud scandal. And the reason it worked is math. A Luckin store costs about $50,000 to build. A Starbucks costs about $700,000, 14 times more expensive. Luckin pickup stores are tiny, 20 to 50 square meters, no comfy couches, no third place. App-only ordering, that's it. And a Luckin drink costs $1.40 to $2.75. A Starbucks in China starts over $4. During a Chinese economic slowdown with record youth unemployment, guess which one consumers picked? And that's not even the worst part. In the 4th quarter of Starbucks' 2024 fiscal year, their China same-store sales dropped 14% in a single quarter. And in November 2025, Starbucks did something extraordinary. They sold control of the China business to a private equity firm called Boycott for $4 billion, 60% stake gone. That's not the behavior of a company that thinks the problem is a marketing slogan. That's a company retreating from the second biggest coffee market on earth. Now let's come home to America, because the US story has its own number, and it's the one that exposes what Starbucks did to its own customers. Here's the data point that should end the woke conversation forever. In the fourth quarter of fiscal 2024, US transaction dropped 10%. That means 10% fewer cups of coffee sold, but average ticket, the amount each customer spent, went up 4%. Fewer people came, but the ones who came paid more. That is not what a political boycott looks like. That is what happens when you price your regulars out of their own morning ritual. Because while prices were going up, the menu was exploding. By 2024, Starbucks offered more than 170,000 possible drink combinations. Every weird syrup, every foam, every tweak multiplied out. And guess what happens to baristas trying to make hyper-customized drinks while a mobile order queue explodes behind them? According to Technomic in 2019, virtually zero customers waited 15 to 30 minutes for a Starbucks drink. By 2024, about 8% did, and the company admitted something remarkable on its own earnings call. A mid-teens % of mobile orders were being abandoned. Customers loaded their cart, saw the wait time, and bailed. Starbucks had accidentally built a system that was driving away its most loyal users. Now let's talk about the part of the story people really want to hear, the boycotts. Because yes, Starbucks got boycotted hard, but not for the reason you think. In October 2023, an account belonging to Starbucks Workers United, the union, posted 3 words: solidarity with Palestine. Starbucks Corporate responded by suing its own union for using the Starbucks name. Think about that for a second. The biggest political lawsuit Starbucks filed during this period was against a pro-Palestinian post from its own workers. Does that sound like a too woke company to you? The boycott that followed was from the left. Pro-Palestinian consumers across the Middle East, North Africa, Malaysia, they stopped buying Starbucks because they perceived the company as pro-Israel. By March 2024, Al-Shaya Group, the franchisee that runs 1,900 Starbucks stores across 11 Middle East and North African countries, laid off 2,000 workers, roughly 10% of their Starbucks staff in the region. So yes, politics hurt Starbucks, but the direction of the damage is the opposite of what the anti-woke narrative claims. It wasn't Ohio conservatives walking away because of rainbow cups. It was Cairo, Kuala Lumpur, and Casablanca walking away because Starbucks was seen as too close to Israel. Which is why the fix looks nothing like what the narrative predicted. Which brings us back to that $21 billion Tuesday. Brian Niccol, the guy who ran Chipotle, didn't get hired to fix Starbucks politics. He got hired because at Chipotle, he more than doubled revenue in 6 years and drove the stock up 700%. He's famous for one thing: operational discipline in casual restaurants, speed, menu simplicity. True put, he's not a culture warrior. He's a production engineer with a suit. And what has he done? He cut the menu by 25 to 30%, put an assistant manager in most North American stores, set a hard rule: every order served in under 4 minutes. By late 2025, over 80% of company-operated stores were hitting that target. Nothing about pride, nothing about DEI, nothing about politics. Just make the coffee faster, make the menu smaller, pay the workers more. And by January 2026, for the first time in 8 straight quarters, Starbucks US same-store sales went positive again, up 4%. The turnaround worked, and it had absolutely nothing to do with culture. So here's the actual answer, straight from the filings. Starbucks didn't fall because it went woke. It fell because a fraudulent Chinese coffee startup figured out how to build coffee shops 14 times cheaper, sell drinks 3 times cheaper, and triple Starbucks store count in 4 years. It fell because its menu got so complex the baristas couldn't make the drinks. It fell because it raised prices faster than inflation and its own regulars started walking away. And yes, it fell because of a boycott that cut sales across a third of the planet. The culture war story is addictive because it's simple. It lets you turn a business failure into a moral victory. But the numbers don't care about your politics. The numbers care about unit economics, wait times, and whether a tall latte costs more than a worker's lunch in Shanghai. Here's the question I want to leave you with. If Starbucks' single biggest gain in market value in 20 years from hiring a guy from a Mexican fast casual chain, not from firing a DEI officer or pulling a pride campaign, what does that really tell you about what was broken? Drop your answer in the comments. And if you want more stories where the numbers tell a different story than the headlines, subscribe.